Welcome everybody. This is going to be my YouTube channel where I document my journey of tracking the markets, both crypto and TradFi. I invest in crypto, I trade TradFi. I have 6 years of experience in the crypto market. And while I'm waiting for my shitcoins to send me to the retirement moon, I decided to learn how to trade the stock market. And that process led me into understanding the option market, because I believe the option market is the most powerful tool in understanding where the stock market is going to go, and where support and resistance are is based on real money, and where it lies. So in this channel we're going to be documenting. It's just kind of a video trading journal for myself, but we put it out there and see what happens. I'm not going to be the best with my production, but maybe some of the content is pretty good. Other than that, we're also going to start a paper trading account with 100K. So with every video, we'll do some trades. Not with every video, but we'll be trading. So that at least gives my YouTube channel a little bit of different credibility, because a lot of these guys are telling you all the best trades to put on, but you don't actually know how much they're winning or losing. So I believe if you can just put a P&L to your YouTube channel, maybe that gives the viewers a little bit of credibility, understanding, and to see how you're doing as a trader and if you can actually make money. Because I believe a lot of these traders don't make money, and it's just a big marketing scheme. So that's the introduction to my YouTube. Now pivoting on to what's actually going on in the markets and seeing maybe some trades that we can put on. Let's dive into it. So the stock market has just done a beautiful 10% crash, and everyone's blaming Trump tariffs and all of that. This crash was actually in the top 5 fastest crashes in the S&P 500 of a 10% drawdown. So it was quite aggressive. And now everyone's wondering, is this the end? Are we going to V-shaped recovery? Is the bull market over? And we're going to try build a thesis around this and see if it plays out. So as we can see, it crashed, then we kind of consolidated, and then after the 21st, we got this lovely little gap up and nice strength showing into the markets. The significance of this 21st date is pretty simple. On the 21st, we got our OPEX, option expiry date. So on the third week of every, on the third Friday of every month, you get your option expiry, which is your option expiry date, where a lot of money gets lifted off the market. And every third month you get your quarterly expirations, and your quarterly expirations are massive. So if you are looking for a trend change, you kind of want to time it with these dates, because this is where money flow actually exits and comes back into the market. So you actually trading with true volume, money volume, actual positions. And we can see this if we look at the amount was 4.7 trillion in this expiry, which was the second biggest expiry ever in history. The only one beating it was December last year. And out of that 4.7 trillion, 2.8 trillion was your S&P 500, because S&P 500 and NASDAQ are hedging tools. So that's why a lot of hedge funds use the S&P 500, SPX, as a hedging tool for volatility. So we know that the option expiry date was on the 21st of March, and we saw that beautiful gap up afterwards, and we can kind of build a thesis why, because this amount of volume. And also, when you have expiry of $4.7 trillion, hedge funds have to reallocate client capital. You can't have it all in cash. You have to allocate capital. So that's normally when you get nice buying or selling pressure based on what happened in the expiry, because you move the S&P 500 with a roughly $125 billion should move the S&P 500 on a normal volume day around like 1.5-2%. So you can imagine when you have to try reallocate a few $1 trillion, obviously you move the markets in a direction. So that being said, we saw that This OPEX was heavily skewed towards the puts, which means there's a nice buyback of positions happening, which caused that bounce. But is it going to just be a dead cat bounce and we roll over? Yeah, that's what we're going to have to determine. Now that we've discussed why there was a little bit of buying momentum, let's go further into it, because we don't only use option data. We also like to back it with seasonals. So we also knew seasonality. We were coming into a period of weakness around that 15th to 17th of February when we saw this. So seasonally, this crash, everyone says Trump tariffs. Seasonally, this was a period of weakness, and yeah, people take advantage of this period of weakness, which is shorting into periods of weakness, and then firms take profits of the shorts, and then you normally have a bounce. That, and we can also say it's due to the Trump tariff scares, but this is just a repeat of last time what happened with Trump, and we saw a nice boom afterwards. So putting all that together, we probably expect a nice bounce, and the bottoms probably are in, and we're looking for a nice upside momentum. We also know that in post-presidential election years, your Q1 is probably your weakest quarter of the year, and then going into a very strong second quarter where tech stocks normally do very well. So yeah, we're going to try to position around these seasonality trends because they are powerful, and I think trading against them is a mistake, and you can get hurt. Listening to news and what the Warren Buffett indicator is doing and all of that. So yeah, I think the bottom could be in, and we're going to trade around that. And let's see how we do. Furthermore, we do think that the US indice market is heavily undervalued at the moment through just over optimistic of Trump's ideas going to be implemented faster than they actually are. So as we can see, the S&P 500 is the second worst performing economy this year. I don't think that's Trump's intentions. The only people that are performing worse than the US is New Zealand and India. So I think there's a beautiful cash-up trade in US equities. So yeah, we're going to try plan for that. As well as that, we've seen your commodities, gold, silver, all of them just ripping to the upside, performing really well. Copper was outstanding. We actually had a beautiful trade on this. I didn't start my YouTube channel there, but here we are. We're actually looking for a reversal on this. So yeah, the reason behind commodities doing so well is everyone was scared of these tariffs and what was America going to do with it. So we saw the goods sector just hoard inventory. As we can see, the global trade balance just front running of the tariff news was remarkable. If we look at the inventory of gold, one sec. Yeah, as you can see, the front running in the gold inventory sector was incredible. Same thing happened in the copper, was just an incredible amount of front running. So yeah, that's why these tariff uncertainty caused everyone to hoard inventory, created such a beautiful rally in commodities, especially copper. So yeah, we're gonna make our first trade. We actually are just waiting for the equities, like the S&P 500. I'm waiting to enter. I was long, but yeah, we're starting YouTube now. So I was long. I'm looking to re-long and accumulate longs more around the maybe Friday, Monday, next week sometime. But for now, I think a little bit of a pullback. So let's not rush into those entries just yet. One entry that I don't mind rushing into that I'm looking at is Tesla. Yes, I actually did record this. We have a buy limit in. Let's cancel it. Let's just do the Tesla now, and then we'll do the gold. So let's enter our Tesla. Let's trade. We're going to do Tesla, and I'm not going to be too greedy. Just the start of that gap would be beautiful if we can get that. So let's buy Tesla. We're going to do a limit, and if 256 would be that gap. I'm not really trying to get too greedy with Tesla, and then we'll have our stop loss at the lows. Stop loss, let me say we want to risk 1% on the Tesla trade, and then 216. So there we go. Maybe if there's a double bot, just give it a little bit of room. Yeah. Okay, so that's our Tesla trade. We're going to do this as a limit order that hopefully manifests out sometime into Friday and Monday when we're looking for that pullback on the S&P 500, and then it can continue to the upside. So that's our Tesla trade. But our A plus trade, our gold trade, we could wait. Yeah, see, I actually bought and sold because I did this, but my sizing was wrong, so I just bought and sold at the same level. Yeah, we can see we lost $2 on that trade. But yes, 100K accounts, so that's fine. We'll take the $2. Yeah, we can wait for our gold trade. We can wait for the American Open for this, but yeah, it's good enough as it is. So we're going to short gold. Sorry, that looks crazy. I'll explain this in another video, but we'll go to the hourly. It just, yeah, I can explain it. This green line to this green line is all the price action within the day. And if we zoom in, I have all my sessions in that. So yeah, that's on my 15 minutes. So we'll just zoom out into the hour so it doesn't look that crazy. We'll get more into this and more into my trading strategy as time progresses with the channel. But for now, we're just gonna build the track record as like a journal for myself. So yeah, we can do a market execution on gold because I'm not trying to be too greedy on my entries over here. I think it's an A plus trade. So market execution on gold. Stop loss. Let's make it 370, 3070. I don't think we're going to go much higher than that. Then this double top, so like 370, there's so much wiggle room. I don't think we're going to get there, but let's just do it to be safe. And then with this trade, we want to do 1.5 risk because this is actually the better trade for now. So 1.5% risk, stop loss 370. And yeah, let's put this in. So the first trade of the journal. So yeah, we have our gold in. Stop loss there, risking 1,498. And we're probably going to try hold this until the 11th of April, and we'll see where that goes to. Maybe we're looking at a 1 to 4. Let's see what happens. That's our first trade. And we'll come back into this. So yeah, enjoy everybody. Have a lovely weekend. This is just my first documenting journal of my trading journal. And eventually we'll get into the education side and I'll show you more of the back end of how I make these trades. But I'm kind of just building up a track record for myself and a journal for myself and then seeing where it manifests out. And you guys can copy these trades. So yeah.